Uncle Sam has a debt problem, and that's when you have to pick up the bill. You came here for the truth, so let me unveil that for you. You know that the US has a debt problem. It's obvious, you see it all the time. The debt keeps going up and up and up. We go to 34 trillion, eventually it's going to be 50 trillion. Let's keep it going. Let's not stop the party here. We want the music to keep playing, right? Well, there's a problem here, and that is you cannot issue an unlimited amount of debt without somebody being there on the other end to buy it. There needs to be a buyer when the US is selling, okay? And if you don't have that, well, there is one option, and that is the Federal Reserve can monetize that debt. They can basically print money to buy that up. And they would suggest to you, the analysts, those in the government, many YouTubers, that doing so is simply just numbers on a computer screen. It's not real and it doesn't create inflation. Look at Japan. They did it so successfully. It isn't a worry. Well, of course, that's not true. And we're going to talk about that today. Let's go. First things first, the Fed would only cut interest rates to help the US service its soaring debt. And I don't agree with that, but certainly when they increase interest rates, and right now the interest alone is over $1 trillion in interest. And I've said this countless times. Interest is getting paid before they're building your roads and bridges, before they're helping out people. Before all that, the interest on this nonsensical debt is getting paid. Think about this. And by the way, depending on what happens, the trajectory here, there has been talk about it getting to $1.6 trillion by the end of 2024, purely in interest. Imagine how this unproductive weight on your back, like if you're going to go and you're going to exercise and you got a sack on your back, okay, and you're going to carry that, you're going to ruck, and you're going to, walk and hike. You put that on, you get growth, you get better endurance, you get strength because you have that weight on your back. But what if it had no benefit to you whatsoever? That's what this is. That's what that interest payment is. It doesn't benefit you. It doesn't benefit I. And there's an issue as you dig in a little bit deeper. From the way we have thought about it the last 15 years, and I think for longer too, there is no economic rationale for cutting. That's what they're saying. The reason they might cut is because the US government can't afford it, and there's a much scarier reason to have to cut. Like, right now, people are suffering so bad. Like, if they wanted to actually resolve this, they would have needed to bring interest rates up. I'm just going to ballpark a number. Let's say 10%, not 5%, but more like 10%. Intentionally cause a recession. Let some businesses fail. Let housing prices, let everything come to a standstill. Yes, that sucks. That hurts. That's painful. But by now, where we are by now, the economy would be so much better. Instead, you create a worse scenario for the vast majority of people longer term. What's better? What do you think? Well, who will buy all the treasuries? You'll buy all the treasuries. Now, I don't know if that's a little meme image here. I assume it is. But it's funny. It's really funny. But what we're dealing with is actually not funny. But I thought I wanted to show that because let's have a little bit of a laugh. Let's lighten it up a little bit. This subject is, it's big. Let's talk about it. Okay. Equities and gilts barely get a mention. It goes on talking about the U.S. Treasury bonds. They want to talk about the forthcoming Treasury Tsunami and what it might mean for everything. This is Treasury Tsunami. Okay. So the government wants to spend a lot of money. In order to do that, they have to, basically issue all this debt. Imagine like they want to spend money. Okay, well, we need somebody to buy up this debt that we'll create. In doing so, as long as they can get buyers, they can spend as much money as they want. But the more that they issue, likely they have to give it at a higher yield. So what does that mean? They have to give a higher percentage as they issue more and more and more and more. Okay, if they were going to issue tomorrow $10 quadrillion tomorrow at an auction, well, they wouldn't have enough buyers unless it was at a super attractive price. So let's just say it was 4% tomorrow. They could sell those at 4%. But if they wanted to do 10 quadrillion, maybe 4% wouldn't be a good enough thing. Investors wouldn't come and buy it all up. They might buy some. But if they were offering it at 50%, hey, US government debt, hey, wow. Okay, I'll buy in. All right, now it's a different story. So there's this sort of playing that they do with the numbers to make sure that they can get enough buyers at their auctions so that they can fund all of this spending. China had been buying an enormous amount all these years. Other countries doing it as well, but China has been holding less and less and less and less. They're like around 700 billion today, down approximately half from where they were at their peak. So they are continuing to sell it off. The Treasury market is the most important capital market in the world, and supply is projected to be pretty huge over the next few decades. In fact, the CBO forecasts that government debt to GDP is on an explosively upward path. Okay, we know that. We've seen this chart before 100 times. That is true, and of course, the interest rate associated with it is beyond imaginable. All right. They get into more things. You could see where exactly the purchases by sector are. There's financial institutions. There's the Federal Reserve, which is in the negative now. You look at pensions and so on, right? Okay. Well, they get into the absolute fact. Without the Federal Reserve there, you have other countries that are doing this, and yes, that's great. With the U.S. continuing to keep interest rates high, their yields on their debt overall are very attractive. They're very attractive because the U.S. is compared to other countries, it's still strong. The U.S. dollar is strong. I can trust that they're going to pay that debt back to me, and so I'm willing to put my money there because I'm going to get it back. Versus like Greece, for instance. All right, and so that's what's happening. That's what we're seeing at this time. And if they start cutting interest rates, though, well, then that's a different story, right? Because I'm going to get a less attractive investment, and other countries might start looking better, right? Okay. They're talking about this more and more. You could see the thinking of what they are doing, what they're trying to achieve. The Federal Reserve at this time is saying, hey, we'll leave the interest rates at this point. The only problem is the national debt itself is continuing to expand. So there's tugging and pulling that's happening, and that is, of course, a huge issue for a lot of people because they're being burdened by it one way, shape, or form. And what do we have? It's that for people, they are going to have to buy this up, actual, normal, regular, everyday people, because there's a problem. You don't have enough investors globally to buy up the amount of debt that they want to issue, right? They're saying here, they explain Treasury auctions are structured so they can't actually fail, but that's not to say that yields won't rise on a tsunami of supply. So maybe this time is different. Right. And so we don't know what's going to happen with this, but understand that what they're looking for here is that regular, average, everyday people, funds, any type of mutual fund, hedge funds, any type of investors within the United States have to start buying up this stuff, or the Federal Reserve has to. And when they do that, your currency's finished. Finished. Because it's always a cycle, and it gets worse and worse very quickly. Very quickly. China may be preparing to deploy an economic nuclear option. This is now adding to the whole fiasco. Look at this. They're just basically saying this suggestion. China is preparing for something major. That seems increasingly obvious, judging from the stockpiling of important resources. Could it be that they are preparing a major one-off devaluation of the CNY? Now that would be interesting. That would make their exports more attractive in this time in which they really need to focus on that. So they could devalue their currency. They start exporting everywhere to the world. The world starts saying, China, give it to me, give it to me. China has purchased, I've read the numbers on previous videos before, insane amounts of every commodity you can think of. They're just stockpiling like crazy. And it's possible. I don't know, but it's possible, okay? So add that to the equation. Everyone and their mother is talking about unsustainable U.S. fiscal deficit and debt. Take a look at off-balance sheet pension entitlements in Southern Europe at 500% of the GDP. Combined with collapsing demographics, it's severe debt crisis in the making. You look around and see the different countries, they're all struggling in this regard. No question about it. I'm not, by pointing out what's going on in the U.S., I'm not saying that Europe is better. Please don't get me wrong here. They are all in trouble. And I've heard the suggestions, there's going to be a debt jubilee. No, not at all. What happens usually, if we have governments that go bankrupt, when governments go bankrupt, in a way, it depends how they do so. Usually what happens is a monetization of that debt. That monetization devalue your currency significantly, and you will be punished as a result of it. People think, there's going to be this deflation, so I'm going to be able to actually get stuff for pennies on the dollar because of this. This is fantastic. This is great. Oh, no. Not you. The globalist elite will. They're going to be able to get deals you can't. That's the difference. And it's happened many times before. Powell is talking about the shrinking of the balance sheet, wanting to be smooth. They don't want it to happen, as it says, doesn't want to wind up with financial market turmoil the way that we did it last time, and the only other time we've ever done this. Certainly, they don't want to do what happened before. The market didn't like it. They want to make sure that reserves are maintained, because that was the complaint last time. $3.5 trillion on the Fed balance sheet apparently was a spooky thing for the markets. Yeah, we're not going anywhere close to that. But what is close is that Tiff Macklem, who's the equivalent to Jerome Powell in Canada, said we are getting closer to cutting interest rates. We do see renewed downward momentum in underlying inflation. That's right. Just ignore energy prices. Just ignore housing prices. Just ignore food prices. Just ignore all prices. And yes, your number that has no significance whatsoever is in fact declining. That's right. That's what we do in Canada. It's like Disneyland, something like that. Or maybe a Disney movie. It's not real, but hey, that's what's going on. Family offices are looking beyond the stock market for higher returns. So this is interesting. So this is wealthy clients. You see that they have 46% of their total portfolio in alternate investments. Alternates include private equity, real estate, venture capital, hedge funds, and private credit. Unlike stocks, alternatives such as private equity and private companies have a more gradual valuation change, smoothing out volatility. The rich people do not invest in 7 shares of Amazon. Okay, let's be clear about that. Yes, there are some that do. Some do that, right? That's like their whole business is that. But generally, they want the stability. They want that at this time, especially. Okay. And so that's what we need to start thinking about. I personally prefer business because you have control over it, much more control over it. And when you're managing a portfolio that's like $87 or whatever, it doesn't really matter. Um, it, it's a very different world. If they're managing hundreds and hundreds of millions or maybe perhaps billions of dollars, they have to do things differently. They might own some stocks, they might have a 401k and all that, but that's a part of the puzzle. What we're seeing right now is, of course, a crisis. It's a crisis that's going on, and you have to manage your portfolio much better. No matter how small it is, you have to do better about it. There are things that you can do as an individual. I talk about the pillars of prosperity. Pillars of prosperity is number one, trying your best to increase your income. And number two, trying to become more self-sufficient. Those are the two pillars of prosperity. I have a video about that called The Pillars of Prosperity. I also have my live classes. The live classes I teach people on the Friday session. We talk about all the, for over 2 hours, all the methods that we, look at traditional finance, looking at investing and so on. On the Sunday Business Live, we talk about how to build an online business, one that has a presence all over the world in order to be able to have currency diversification, geographical diversification, and all kinds, okay? All kinds, and multiple streams of income. And this is the type of thing that you just can't get anywhere else, especially in the niche that I'm in. What do they tell you? Buy my course and I'm going to be able to, solve your problem because you're going to learn how to trade from me. Nobody has learned how to trade from a options course that the other guys, the other YouTubers are teaching you, okay? That's just a simple matter of fact, okay? Simple fact. If you want to know the truth, you can check I have my playlists on my channel. Tons of free stuff in there. Tons of free stuff. Okay? You don't have to pay a dime. That's it. I hope you appreciate this information. If you did, hit that thumbs up. If you hated it, leave a comment down below and tell me off. All right? I'll see you tomorrow. Take care.